Hey, what's going on, guys? It's Travis here with JT Wealth. In today's video, we're doing a crypto update. Now, crypto markets on the whole have taken a beating. We are talking about a market that was near the $3 trillion market cap not too long ago, and as of today has broke below $2 trillion, with Bitcoin and Ethereum taking the biggest hits so far. Speaking of Bitcoin, we're also going to talk about how technical analysts think they have found the support for Bitcoin right around that $40,000 mark. And if you're looking at Bitcoin prices today, it's not far above that. So this might be the perfect time to get involved with Bitcoin or Ethereum, whatever your favorite cryptocurrency is, because we might be at the bottom. Let's get into it. Alright guys, thanks for checking out today's video, and again it is all about cryptocurrency, where the market's at today, what's going on with Bitcoin and Ethereum, and what might continue going forward in the near term with Bitcoin specifically. And as always with my crypto video, guys, I gotta remind you this video is brought to you and sponsored by Crypto.com. Crypto.com is still the world's fastest growing crypto app, and if you use my link that's in the description section and in the pinned comment down below, crypto.com/app/JTWealth, you'll get $25 free just for signing up and funding your account. And we're going to talk more about Crypto.com later in this video. All right, but now we're going to jump right into the meat and potatoes of today's video. And if you haven't already, take 2 seconds out of your day, smash the like button for me and consider subscribing. Now let's get into the articles. Business Insider put out an article this morning that said crypto market slips below $2 trillion in value as sell-off wipes billions of big hitters like Bitcoin and Ether, as well as some altcoins. Here is taking a look at the Bitcoin price as of maybe an hour or so ago. Of course, this is likely to have fluctuated since then, but you can tell this just since the beginning of this year, just January timeframe, we have seen Bitcoin go from maybe $47,000 down to about $42,234 as of the time of this image. As of this morning, I believe it even crested that $40,000 mark. So Bitcoin as a whole is definitely touching that support level of $40,000 or hovering nearby. Ethereum also down significantly on the year, appearing to mirror Bitcoin's drop. Now also, Ethereum had a high of about $4,600, so seeing Ethereum now closer to $3,000, this is definitely a much more appealing price target for people looking to get into Ethereum, especially those in the belief that this could potentially reach those $10,000 levels eventually. Now, the cryptocurrency markets as a whole shrunk 2% in just the last 24 hours. Like we just saw, Ethereum is trying to touch that $3,000 level. That is down 3% just this morning. Even the so-called Ethereum killers, the crypto or ADA like Cardano and Avalanche, had all of last week's gains almost completely wiped out. And like I mentioned earlier, the global crypto market is now sitting at around $1.95 trillion after having peaked at close to $3 trillion in mid-November. And that's according to CoinMarketCap, who's tracking numbers like that. And this dip is coming after the US Treasury yields hit their 2-year highs, which also has been causing stocks to sink. This has been a common theme so far in 2022, as the Fed Reserve repeatedly signals it could hike US rates several times throughout the year, and higher rates tend to weigh on more speculative assets as investors are more likely to put their cash into areas of the market they perceive to be less risky. Now this is interesting because I did a video the other day showcasing the historical data of Fed rate hikes and how it implemented the overall market. And historically, I think it was back to like 1994, the market does very well when the Fed rate hikes occur and throughout the time period that those rate hikes continue. So it is possible that the tech stocks, that the speculative stocks won't share the same growth, but we never know, right? This is probably the second, maybe even the first huge federal rate hike that we've seen throughout Bitcoin's and Ethereum's and crypto's big massive history, right? I think the first would have definitely occurred back in 2018, 2017 timeframe, but this is probably the second. Now that correlation to the market is supported by arcane research reports that have linked the S&P 500's performance to Bitcoin. They said that currently the S&P 500 seems to dictate the direction of Bitcoin and the overall crypto market, evidenced by correlations reaching new highs. And Bitcoin's 90-day correlation to the S&P 500 is currently at its highest since October 2020. And now remember that correlation to the S&P 500, because as we all know, analysts can vary very significantly in their approach to how they're going to view specific things. And in that specific case, it's somebody relating the Bitcoin trend to the S&P 500. Later on, we're going to see somebody connect it to the NASDAQ, I believe, and more tech stock heavy stuff. So you'll see exactly what I'm getting at later on. But with everything going down, exactly where is the bottom for Bitcoin? And specific tech analysts have found that $40,000 may be that support level. Let's check it out. And the article you're looking at right now, Bitcoin RSI and MACD generate bullish divergences near that $40,000 support level. Since January 8th, Bitcoin has been trading above the $41,500 level, except for a very short period of time on January 10th when it dropped down to about $39,650 before shooting back up almost immediately. That of course showed a lot of buying pressure at that level. But more importantly, both the RSI and MACD have given significantly bullish divergence green lines that we're going to show you guys here in a second. And these types of divergences usually show up right before significant upward movements. That's why they are so important. So looking at the big picture, if an upward move transpires, it's likely to be met by resistance around that $50,930 level. And this target is both the 0.382 Fibonacci retracement resistance level and part of the horizontal resistance area. Now looking at the short-term Bitcoin movement, the 6-hour chart shows that Bitcoin is broken out from a descending resistance line and is validated at a support after, which you can see there at that green icon. Now after about a brief rebound, Bitcoin created a slightly lower low on January 19th. Earlier this morning, this served to validate the $41,200 level as a minor support. And you can also see they're following another descending resistance line, that dashed line there on your screen, in the shorter term. And a breakout above it would likely take the price to $45,850. This target is the minor 0.5 Fibonacci retracement resistance level, and again, the horizontal resistance area. And before we move on any further, just another reminder, this video brought to you and sponsored by Crypto.com. Crypto.com is still the world's fastest growing crypto app, and you can join over 10 million users buying and selling crazy amounts of different cryptocurrencies at true cost every single day. They also have the ability to get involved with NFTs. You can get the Crypto.com Visa card and get up to 8% cash back, or just continue growing your portfolio by earning up to 14% interest on the crypto assets you store in Crypto.com. Again, you can use my link, crypto.com/app/JTWealth to get $25 free for signing up and funding your account. Here is a quick look at some of the NFT operators that have been pushing their products on Crypto.com. You can see some have been sold for over $2 million, like the Aston Martin one you see there on the far left. NFTs have been a huge thing lately, and if you're looking to get involved, this might be the perfect outlet for you to do just that. All right, but now back to Bitcoin and the possibility of a breakout. And what you're looking at now, we've got the 2-hour chart. This is showing that Bitcoin is potentially trading inside a descending wedge, which is considered a bullish pattern. Currently, it's approaching the end of this pattern, which has been in place for about 6 days now, back to January 13th. Similarly to the daily time frame, the RSI has generated a considerable bullish divergence, supporting the possibility of a breakout. So when taking into account the ample support just below the price and numerous bullish divergences, an eventual breakout seems like the most likely scenario for Bitcoin. Regardless of whether or not Bitcoin does manage to push upwards, there are still those people who believe that Bitcoin is going to face a lot of pressure going forward, as will the cryptocurrency world as a whole. Let's check this article out. And this one is Bitcoin billionaire Mike Novogratz says crypto prices will stay under pressure as bond yields shoot even higher. And Mike said as long as rates go higher, we will see pressure on the NASDAQ and crypto. And he is, of course, the founder of investment company Galaxy Digital. He says that bond yields have risen sharply this year, with investors anticipating a series of interest rate increases from the Federal Reserve in the U.S. economy. And this deals during a time of the hottest inflation in 39 years. And the jump in some of these yields had whacked technology stocks and the tech-heavy NASDAQ 100 index as well. and it's touching on cryptocurrencies like your Bitcoins, Ethereum, and Binance Coin. And analysts on a whole have said that the more speculative parts of the market look less attractive when returns on government bonds, which are risk-free, become higher. All right, so this is where the two worlds kind of touch, right? Right now, in the short term, while bonds increase and speculative stocks like tech and cryptocurrencies seem less than appetizing to some, like the people who have a very low risk tolerance, they may push outside of cryptocurrencies and outside of tech, go into value stocks, go into dividends or bonds, whatever the case may be, and that is representative in the NASDAQ and the cryptocurrency drop as of late. But when it comes to the Fed market hikes and the video I did previously that showcased the S&P 500 and the market as a whole doing exceedingly well during periods of federal rate hikes, that tends to lend itself to the earlier representation where the S&P 500 and Bitcoin tend to mirror each other. So if that were the case, these NASDAQ concerns should be short-lived, and the long term, as the Fed rate hikes continue and the market goes up with it, we should see a Bitcoin and cryptocurrency growth period if it manages to follow along with the mass market as a whole. Alright guys, but that's all the cryptocurrency news I have for you today. Hopefully you found some value in the video. If you did, smash the like button for me, consider subscribing, and until next time, bottoms up.